FOMC day. I hope you guys are excited for a very interesting day in the market here. This is going to be a potentially a pretty big FOMC meeting here. It is looking like we are going to get that 25 basis point cut. But ladies and gentlemen, I think you know what I'm about to say next. I think it's pretty obvious at this point where we are going to go next here in this stream. I have told you guys time and time again that I am just going to keep outlining and handing out the best trades in the market for everybody here. That is what I am here to do. I am here to show you guys what is actually possible in the market if you start operating the correct way. Now, what is this trade, you might ask? I don't know. Maybe if you were following along on Twitter or if you came to the live streams, you guys would know. But, ladies and gentlemen, we have our... This is going to sound crazy again, but those of you guys that are in LTMP or those of you guys that have been paying attention will know, this is our 6th 10x plus trade in the last week and 16th in the last 2 months here. Baidu, absolutely epic trade here, guys. Congratulations to everybody that has nailed this one. I've said it before. I've said it again. I said it 5,000% trades ago, 10x trades ago, and I will keep saying it. And you guys will just keep hearing me victory lap over here. This one, 1,300% here for the LTMP group off of this trade idea that I gave out. We also had Baidu over here. Absolutely epic trade here today as well. We had Tesla gapping up on Monday. So really, we didn't have to do anything this week. Absolutely nothing. After we saw that gap up on Monday on Tesla, guys, it was pack up your bags, be done, go home, follow the LTMP methodology, and wait for what we are going to see at this FOMC meeting today. But like I was telling you guys in the stream yesterday, there are some opportunities out there that regardless of FOMC that we could easily take advantage of. And I know all of you guys in LTMP now have a lot more cash in your cash balance than you did at the beginning of the week here. So shout out to all of you guys. But ladies and gentlemen, we'll talk about LTMP a little bit more. You guys know the deal. Get 50% off your first month to the best trading community in the game. I don't know how many more times you guys want me to show you guys the most disgusting trades in the market. We've hit every single one over the last 2 months. Every trade that you guys could think of that is fired off. Open, DNUT, Kohl's, Tesla, NEO, Palantir. There's every single one we've hit. So, ladies and gentlemen, it is that time of day again. Say good morning to somebody in the live chat. If you guys would like to say good morning to me, or it's good afternoon now. Good afternoon to me. Would love to receive some good afternoons over here. If you guys are new to the group, new to the stream, new to the channel, let me know. I would love to welcome you guys in here. And as always, ladies and gentlemen, make sure you guys are hitting that like button on the way in. Costs you absolutely nothing to do it, but it helps me spread these streams out to as many people who actually want to learn. We have a 200 like goal on the stream. Again, for those of you guys that don't know, I mean, this is just another great example of why LTMP is the best. LTMP stands for less trades, more profits. I don't make money on these streams. I don't make money on YouTube. I am the only person that you guys know on the internet that is demonetized on YouTube for talking about how many 1,000% trades that they hand out to their group. YouTube demonetized me for it. They said, nope, unrealistic. And then I proceeded to give out 16 more. Boom. All right, we're going to keep doing it. So let's see what we've got in here today. We're going to kind of get after it a little bit here. Ryan, Adrian, Gerald, Pablo, Sander, Reaper, Adrian, Dan, Rogue, ICR. We got Raceland. We've got Iro, Miguel, Yuki, Poor Man Investor. We got Day, Daily Taylor, Aerolus. Let's see. Cooper. Let's see. Julian, Ryan, Damon, we've got Patrick, David, GC, Sand, Riddick, I think was how you pronounce that one. David, Damon, good morning. Can you do these trades with Apex? No. If you guys are still trying to day trade in this environment after I've shown you 100 times now that swing trading is always going to make you more money than day trading, I don't know how to help you at this point. I don't know. I've shown you every time. Are you going to wait for the next 15,000% trades? 15 of them to understand that? I don't know. So, very, very interesting coming into today, guys. I think the risk in the market right now as we get into the 2 p.m. interest rate decision is a hawkish cut. And what I mean by that is overall, if the Fed comes out and is still saying we're going to be very data dependent, we don't really know what's going to happen next, we're still going to be very cautious, the market may not view that positively even if we end up getting that cut. So that is the risk out there today that we do have to be aware of. Again, for everybody in LTMP, there's really every single position that I've outlined this week is either like the ones that have gone are wildly free or everything is hit the take profits there. So let's see. Is there a prop from outside where you can do these trades? No, guys, you don't need a prop. Okay, this is okay. So here's an interesting thing. Just today, I posted an Instagram video showing how you could have turned $95 into $1,300 something with one of these trades. There's been so many of them. There's honestly too many of these to count. I'm actually losing track of how many 10x trades I've given out. It's like it's between 15 and 20 right now in the last 2 months. I know there's 6 in the last week. So, like I always say, guys, pay attention or pay a premium. Prices for LTMP are going to be going up every single month here. So the price that you join at is the price you're locked in at. It's never going to go up on you. So again, you can also get 50% off your first month with code September. The link's pinned to the top of the live chat. Do you guys have any questions on it? Let me know. The question at this point isn't if LTMP works, obviously. The question now is how many of these are you going to actively sit on the sidelines for and miss? That's the question that you need to ask yourself there. So we'll see. Yeah, any questions on anything that's about to happen, let me know. That's why I do these streams for you guys. FOMC day is always fun. Again, 2 p.m. we're going to get the interest rate decision, and then at 2:30 we're going to get the Q&A. But team, keep smacking that like button on the way in. Let's spread these streams out. I mean, I like to say that this is the best kept secret on YouTube. Nobody else is even coming close to the results that we're able to generate here. I post them on Twitter all the time, Instagram, TikTok, YouTube in the community section. I made a YouTube short today with them again. In just the last week, I mean, I'm up like what did I show you guys earlier? It's like 11 grand in a week. Not bad. I mean, again, like I was telling you guys, I'll probably post that YouTube short for you guys here too. But everything that I was taking really over the last 2 weeks here was so aggressively sized down because we had PPI, then we had CPI, then we have FOMC this week. And again, even if we are going to see some of those really, really awesome setups fire off, like Tesla, Baidu, Pinduoduo, we obviously have to be managing our risk. And the main reason, guys, why we're able to hit so many of these insane trades, I know it looks crazy from the outside. For everybody sitting on the sidelines, it's like, how is he doing this so every time? It's like, well, once you understand what we're doing in LTMP, it really becomes a lot simpler to understand, oh, it's that simple. That's like the main piece of feedback that I received from LTMP. It's 2 things. It's 1, I didn't realize that it could be this simple. And 2, I wish I was doing this all along. That's the main piece of feedback. I know there's so many of you guys out there that were trying and struggling with day trading that come in, and in a month of LTMP, you're like, all right, why was I doing any of that garbage before? And I'm like, I don't know. Your new goal, get your trading account bigger than your 6-figure retirement account. Ryan, if you keep doing what I've seen you do this week, I mean, I don't think that's out of the question at all. Let me take a look through some of the community gains just from today. We got 344% Tesla, 350% AMPX, 217% Marvel, 102% CAT, 137% Marvel, 100% Marvel, 141% PDD, 264% PDD, 220% PDD, 240% Walmart, 170% Elf. We haven't even gotten to the 1,000 percenters yet. 1,336% Baidu. There you go. It's been insane. So really, if we cover what was it? The last week. So last week into this week, the 1,000% trades were there were a lot. There was 6, I think. I might forget some because there's just too many to count at this point. UNH, Tesla, IONQ. What were the other ones? WBD, that's 4. Baidu, that's 5. There's one more I'm forgetting. That's 5. There's one more I'm forgetting. Again, there's just too many to count. Let's see. But yeah, I'll throw the link in here for the live chat for you guys. Again, prices are going up at the end of the month. Make sure you guys lock in the lower rate before then. Eventually, I've told everybody else that watches the streams all the time, eventually prices for LTMP will be $199 a month. They're just going to continue to go up. But if you guys joined before, obviously the price increases. You get locked in at the rate. The prices will never go up on you. But yeah, use code September, get 50% off your first month. Come in there with us, and you can be the next great success story. If you guys are willing to learn, it doesn't take very long. Oh, yeah, IONQ, I thought I said. It was, no, it wasn't, RKLB, was RKLB 1,000 percenter? I don't know, I've handed out, it's like 16 of them at this point. It's ridiculous. Nobody else, again, if people had these types of results on the internet to show you, they would. Like, I just look on my Instagram story, look at my Twitter. It's just they're everywhere. Nobody else is doing. We are doing something, guys, that the trading community has never seen, ever. They're never gonna see it again. Once I stop doing this, and I'm not able to do this every single day, you're never gonna see anything like this ever again. It's impossible for it to happen. So we're gonna keep doing what we're doing. Anything less than 100% return doesn't impress the LTMP Mafia anymore. Yeah, dude, that's like basically a break-even trade. It's great. I love seeing you guys win. It's been absolutely awesome to see, and we're just gonna keep doing it. Again, like I said before, I'm just gonna keep doing it. How many are you gonna miss? You know, how many? Am I gonna just keep victory lapping on all you guys? I'm probably going to. Nothing really coming through the newsfeed right now. We're just kind of hanging out. We've got 20 minutes to go until the interest rate decision. Again, we're expecting a 25 basis point cut. The thing that we need to be cautious about is a hawkish cut, where they kind of come out and are like, yeah, you know, I mean, we're willing to kind of cut once, kind of stay. But with the weakness in the labor market, and the thing that most people are, it is special. It is very, very, very special, this group. It's unbelievable. Nobody's ever seen anything like it. I mean, you guys tell me that. I know, obviously, because it's so disgusting. At this point, even the 1,000% trades are getting watered down. Yeah, I know. You guys are spoiled. You guys are very spoiled in there. Name anybody else on the internet that's handed out even just like 16 10x trades in the last, month, 2 months. 6 of them have come in the last, I don't know, 7 trading days. I'm just going to keep doing it. Every single one of you guys can do this too. It is so mind-numbingly simple. It is mind-boggling to me that more people don't operate this way in the market and instead try and trade these short time frames with no edge and just doing stuff that is proven not to work instead of focusing on all the things that are proven to work over time in the market. But again, I'm just going to keep showing you guys the best results, and we're going to keep doing it. Yeah, you're going to buy a new car? No rush. I'm serious. You're going to set up a separate account to buy a new car? I mean, if we keep this up, which I think we will with these market conditions, where can you set these trades? What do you mean? Patrick, are you, what do you call it? If you're overseas, again, this is the other beautiful thing about LTMP. Everybody in the world can do it. What do you call it? The shares trades almost all of the time have a better risk to reward profile than the options trades do. Again, there's slight differences. Like, you got to be a little bit more cautious of gaps. You're not going to be able to be in as many positions, but you can pick your poison on them. I mean, there's so many epic shares trades that I've had. Even like AEO and DNUT, where you guys, Scott's asking, is it really worth it to join? I don't know. Everybody in LTMP, let them know. Does 16 10x trades in the last 2 months sound good? Does 6 of them in the last 2 weeks sound good? I don't know. I think it does. I mean, probably, says Cole. Yeah, anybody in the live chat, just let them know. Everybody that's in LTMP, just let them know what you think. The reason why I talk about it so much, guys, is that there's so much, excuse my language, bullshit out there with people just spewing garbage. Nobody actually knows what they're doing in the market. I know I look young. I'm 26. I've been operating and learning about the markets trading since I was 14 years old from some of the most successful market participants. So I love sharing that information and value with you guys. I'm going to keep doing it. As long as I can help as many of you guys as I possibly can, I'll be happy. Where do you have to put your money to enter in the trades? Again, any broker. It's so funny that people get so hung up by what broker? It's like, guys, it doesn't matter. You have any broker that's allowed to trade US equities, you're fine. Interactive brokers, Tasty Trade, anything that's going to work overseas, you're going to be fine. People love to limit themselves and get hung up on things that just don't matter in the market. They get so hung up on just the nitty gritty of guys, once you learn these skills, you're going to be like, it's really that easy? It's like, yeah, I try to tell you. Hitting the 1,000% trades is the easy part. Yes, if you follow the rules, it's worth it. There you go. The only thing bad about LTMP is you'll be paying a lot more in taxes. That's true, too. Start with WAP? Yeah, well, yeah, Romeo. Kicking yourself for not holding the free by do would have hit 3,000% this morning. Just saying because these results are real and VIX knows his stuff. Yeah. Yeah. I don't even have to say it. Oh, we're better than everybody else. We have the better results. It's no. It's very obvious. I just show them to you all the time. If you guys were seeing these results anywhere else, you wouldn't be watching the stream, you know? You live in the US? Yeah, Webull, Robinhood, Thinkorswim, anything. Anything will work. So, but yeah, links pinned to the top of the live chat. I'll throw it in there. I like Webull a lot. Webull's great. I'll throw the link in the live chat here for you guys. Again, use code September, get 50% off your first month. Don't miss out. Prices are going up. Lock in the lower rate, and you're gonna be good to go. If not, it's fine. I'm gonna keep victory lapping. I said this like 5 10x trades ago, 10 10x trades ago. I've been saying it all year that I'm just gonna keep doing this. I don't know how many more of them you guys want to see. I'm just gonna keep doing it. So. If you do stupid things, SV will call you out. Well, yeah, because think about it like this, guys. Like if we have a tool at our disposal or a strategy at our disposal that's able to generate the results that I've showcased to you, why would we look at anything else? You know? It's like there's no need ever to do all sorts of other nonsense in the market. It's like the garlic cake thing. So I can explain to you guys what garlic cake is. Imagine you have a recipe to bake the best cake in the world, and I give it to you. And it's very outlined. It's like, here are the very simple steps and the ingredients that you need. What do you think I'm going to say to you when you look at me and you go, hey, are we going to put garlic powder in the cake? When do we put garlic powder in the cake? Can I put garlic powder in the cake? I'm going to be like, what are you doing? Stop. No garlic cake. There's no garlic cake anywhere. You know? So, yeah, I mean, it's the best in the world for a reason. I mean, it's the results. The results are proven. So, I mean, even today, just like PDD 250%, Baidu 1300%. I mean, even like Tessie over here from this week too, from last week into this week, this is just textbook, you know? So, just going to keep doing it, you know? Don't miss out. So you have what, 2 weeks-ish until the next price increase? Retail sales? That's not going to... No. So this is the other thing that I was going to say as it relates to inflation. Jerome Powell has finally hopped on the side that I have been on all year long. One is that there's 2 things. One, these tariffs are not actually going to yield a massive inflationary effect, and even if it has a little bit of a short blip, it's not going to last. It's a one-time thing. The second thing is that the Fed is not going to be able to get in long-run inflation down to that 2% target. If they wanted to, the federal funds rate would have had to have gone up a lot more than it did, and we basically would have had to have caused a pretty big recession or maybe even a depression in order to have that happen after all of the things that we've witnessed over the last 5 years. So what then happens? Well, 3% is the new 2%, but what are the implications of that? So if we are just going to have it be a given that inflation is going to run a little bit higher, well, you need to have growth run at very, very elevated levels in order to counteract those inflationary effects. So what is actually the most important thing right now is the labor market, because the labor market is going to be a kind of forward-looking indication of where growth is going to go. And what have we seen recently with the labor market? Well, the unemployment rate has ticked up a little bit, and the jobs numbers were overstated by about, 900,000 jobs? So the Fed has now been very, very, they're a little cryptic, but what they've effectively said is we are okay with having inflation run a little bit above target, even though that's not their choice. But we are not going to sacrifice growth. Lost your job in July and trading some of your severance pay. Want to start trading for a day-to-day job? So if I join, you have a better chance of making this happen? No, don't join if that's your goal. I don't want you in the group. Sorry. I mean, just to be completely honest, that sounds very harsh, I know. But if you are trading because you don't have an income right now, don't trade. I don't need your money. I really don't. You guys see how much money I make trading. I don't need your money. I don't want to put anybody at an you got to have a clear mind when you go into the market and trading from a perspective. You don't have the bankroll behind you or the ability to lose money if that's what's going to happen, which again, I'm not forecasting that happening at all. But that's not the correct mindset to go into the market with. It just isn't. So Scott, we'd love to have you in there if you're in the right spot to join and you're going to come in and be able to take things slow and have that long-term vision. But one of the reasons why prices are going up is I really will get tired of people coming in and just saying, I want to make money right now. This is all about giving you guys the skills to have long-term success in the market and building that foundation that nobody can ever take away from you. You know? This isn't like, oh, come in, SCV is going to hand you to... No. I'm going to guide you through the exact ways to operate in the market at a professional level. So everything I do is very fair. I never BS anything with you guys too. Like, what you see is what you get. There's no upsells, no nothing. Like, once you go in, you go through the learning curriculum videos. It becomes so much simpler to you guys. Well, that sucks. Yeah, I mean, Scott, I hate to say it that way, but again, I'm going to be very honest. I'm never going to be, because think about it. It's like, if you come in and that's your mindset, it's like, well, the odds are you're going to have a little bit of a lower likelihood at having success, because it's like every trade that you take, you have to take, like, you have to win. The way I say it to everybody, guys, is the outcome of one individual trade to me is completely meaningless. I don't care what happens. Why is that, though? Well, the reason for that is because every single trade that I outlined for LTMP has the ability to run multi-hundreds and if sometimes multi-thousands of percent. So if I'm going to take a 10, 20, 30% loss on a trade, on an options trade, I literally don't care. The other thing is I can sit in the market, guys, for months at a time and do nothing. Nothing. I can do nothing. Because a lot of people, when they come into the market, they think that there are two things that they can do. Long, short, basically. But it's like, they forget the third option, which is actually, in most cases, the best option, which is do nothing. Capital preservation is so important. And what I also say all the time, you want to learn more? Mostly retired? Oh, well, Scott, you should have just said that, man. I didn't know. That's a different situation then. If you're mostly retired, yeah, hop in. We'd love to have you in there. If you're good, if you're in a good spot financially and you're good to go, yeah, hop in, man. We'd love to have you. But hopefully you see what I'm saying, where it's like, if somebody comes to me and says, I'm not in a great spot and I lost my job, I'm going to come in and start trading, I'm going to be like, don't do that. You know? Even my friends, like, they see me and what I'm able to do and the results that I'm able to generate, and they're like, I just want to do what you do. And I'm like, you don't get it. Like, you're going to have to take a little bit of time, and that, like, you're going to have, there's going to be a little bit of, it's a different game when you're trading for, like, oh, this is what you do. You know? But yeah, Scott, we'd love to have you in there. I mean, again, it's not expensive to join LTMP, especially for the results that I'm able to generate for everybody. What was I saying before? About the 1,000%ers? I don't know. I'm going to call out more of them. They're just going to keep happening. Like, if you think this is going to stop right now, guys, I'm just going to keep doing it. But first things first, again, when you guys do hop in, connect your WAP account to your Discord account. You guys are going to be good to go. It'll let you into the group. I'll send you the start here message. It tells you kind of an outline of the group, what to expect, where to go find the course curriculum videos. And then the second step is to go through the videos and ask me questions. That's what I'm here for. Critical, this is awesome. I just wanted to say I'm currently on vacation thanks to Vix. Let's go team Critical. Shout out to you, buddy. Let's see. Ooh, more community games. What do we got? 217% on Snapchat on the basin break. There we go. Yeah, so the entry that I was outlining for everybody on Snap here in the LTMP group on the streams was 764, currently trading at 814. Bing, bang, boom. There's another one. I think it's interesting on these streams too. Not desperate for money. Oh, Scott, yeah, we'd love to have you then. I just hope you're understanding why I said what I said, because your message was like, I just got laid off, I want to trade now. And it's like, no, don't do that. Romeo says, found SCV right after closing my business, and it has allowed me to easily cover my lifestyle without having to start anything else. That is an unbelievable story there. That is awesome. So again, I'll throw the link in here for you guys again. We got 6 minutes until Powell. There you guys go. There are going to be a lot of people on the stream that are going to be like, why are you talking about this so much? And it's like, I don't know, because it's completely life-changing for everybody that hops in. That's why. That's why. If you guys saw what we were doing in there and you paid attention to the results, you'd be like, oh yeah, I get it. So again, it's been 2-ish years he's been doing that. That's amazing. That's amazing, man. Congratulations. So, but Scott, hopefully you understand why I said what I said. I did not understand. You were in a different position. But according to what I thought it was, statement still stands. Like your honest opinions you threw out at me? Yeah, I mean, I'm always going to be very honest. Like, the market is not, like, if you guys are going to do, like, this is something that a lot of people in LTMP realize when they hop in, especially on the streams. It's like, I'm only looking for very, very specific things in the market, and everything else that's occurring to me in most cases is irrelevant. And there's a lot of things that people do in the market that to me make no logical sense, because it's all probabilities at the end of the day. You got to think about what the most likely outcome is based on certain actions. And if that outcome isn't good or isn't positive over time, well, then I'm obviously not going to take that action. So that's why everybody's able to have so much success. And again, the like I say it before, like hitting the 1,000% trades is the easy part. The value in the group actually comes from in the time periods where I'm like, all right, slow it down a little bit. Which technically this, like, it's funny. This was one of those weeks where I was saying to everybody, I was like, slow it down, don't go crazy, size for 0, and then we end up nailing like Baidu for 1,300% and PDD for 250%, and the Teslas ran over 1,000%. Like, it just happens that way sometimes. On a keyboard, Scott, that's okay, man. That's okay. We'd love to have you in there. All of you guys can do this. It's not that hard. I wouldn't even say it's not. I'd actually just go as far to say it's easy. The only people that say trading is hard are the ones that, like, one, don't have the ability to teach. They're just not good teachers. And two, they don't actually have a simple and repeatable approach to the market that is, like, statistically proven to generate positive results over time. They just don't. Like, most people don't. But let's see. Oh, we have a lot of slackers on the like button today. Uh-oh. We have a 200 like goal on the stream, guys. We are over a quarter of the way there right now, but let's see if we can hit it. So, happy FOMC day. We have 4 minutes to go until the interest rate decision. I think we get an SEP as well, Summary of Economic Projections, which will be important. That'll be very, very, very interesting to see how that goes. And then, yeah, if you guys want a little bit more insight into the results from the trades that we're taking or kind of the breakdowns of them, my Instagram and TikTok account, I've been posting a lot of the trade recaps with the results recently. So if you want to kind of get a little bit of a better insight into them, there you go. I think my Baidu is 1,500% now. Bang. There you go. There you go, guys. 1,500%. Add it to the stack of just all the crazy 1,000% trades that I've given out over the last 2 months. Great work, Ryan. Great work. I'm very, very, very proud of all of you guys in there. It doesn't take, like, literally you could learn this stuff in an afternoon. And that's my goal. Like, the reason, like, I teach things and operate the group a lot differently. Like, my goal is for you guys to come in for, like, a couple of months and then leave if you want to. If you want to stay and get all the insights and the market, all the stuff that I do for everybody every single, great. We'd love to have you in there. Well, that's not the point. I'm not here to just be like, I'm going to just make you beholden to me and have you. No, I want you to learn the stuff, get what you need out of it, and then get out if you want to. I was a slacker. Yeah, don't be a slacker, guys. Don't be a slacker. Hit that like on the way in. We've got 2 minutes to go. He has given away 4,000 percenters on Twitter in the last month. Yeah, it actually might be more than that. Like, at this point, like, you guys don't even have an excuse to not be making any money because I hand some of these out for free. Like, all right, I'll throw the link to my Twitter account in there. For those of you guys that aren't following me on Twitter, there you guys go. That's the link to the Twitter account. Some of you guys might think that you're following me on Twitter, but what is it? Year and a half ago, I made a new Twitter account. There it is there. So, but again, those aren't like, you're not, I say this on the public streams that I do every day at 10:30. That's another thing. I'm live here every day at 10:30 as well for you guys. So if you guys want to come back, listen to me analyze the market all the time, you guys are more than welcome to do that. But they're not meant for you guys to take. It's just meant to show you, like, this is what's possible if you listen, and just to kind of showcase my efficacy in the market. So, but we'll see. 10 likes away from 100, guys. I think we can hit 200 on the stream today. I think we got it. All right, less than a minute to go here. 40 seconds, ladies and gentlemen. Here we go. Again, shout out to LTMP. That is 6 10x trades in the last week. Absolutely unbelievable. That makes 16 in the last 2 months for everybody in the group. Shout out to you guys. We're just going to keep doing it. Just going to keep doing it. So I think my Instagram and TikTok accounts are both Short to Vix 1. So if you want to watch those videos, kind of see the results, kind of go through, I do kind of give you guys some tidbits of the strategy in there too. Make sure you guys are watching those. Those are going to be helpful for you. Let's do it. 6 likes away from 100 as well. Thank you, guys. I appreciate it. So let's do it here. We got here we go. Here we go, ladies and gentlemen. Oh! Bitcoin going the other way. Where's Bitcoin going? All right, Bitcoin pulling up. Let's see. Market ripping. All right, let's pay attention to the news feed, ladies and gentlemen. Let's see. You're long. If you're trading FOMC right now, I think it's a very, very low IQ gambly behavior to be doing. And I think that everybody that is gambling right now in FOMC trading right now is not putting themselves in position to have long-term success. You are focused too much on short-term results and not focusing on the long-term vision and setting yourself up to have long-term success. Think about what we did in LTMP this week. If we have the ability to generate 6 10x trades in a week's time, there is literally no need to be gambling on a binary event such as this. So let's see what we get over here. We have Federal Reserve cuts rates 25 basis points to a target range of 4% to 4.25% range as job gains slow and downside risk to unemployment rise. Projects more cuts ahead, notes inflation still elevated. Mirren dissents, but it was in favor of a 50 basis point rate cut instead of 25. Let's see. Fed projections show lower path with 50 basis points of more cuts in 2025. That's interesting. Median Fed funds seen at 3.6% at 2025, 3.4 in 2026, 3.1 in 2027 and 28. Longer run rate unchanged at 3%. So as of right now, this is kind of a dud. Everything is coming in like the market has expected. Remember, we still are going to be getting the Q&A period with Jerome Powell at 2:30 p.m. Eastern time. So that's going to be very interesting. So make sure you guys stick around. A lot of stocks are ripping over here. We've got Baidu, I think, getting to the highs over here. Yeah, Ryan, those should be up. Again, this is the big 1,000% trade from this week. It actually is looking like it could get up to 2,000%. So if anybody was not convinced of LTMP, the last 16 in the last 2 months, 10x trades should probably convince you at this point that that is the way that you should be operating in the market. Most of these other people out there have no idea what they're talking about. Just zero. But market's kind of flashing around here. It is moving to the upside. You know what I am interested in right here? Marvel. Oh my God. Marvel was another good one. How's that? Oh my God. Oh my God. Look at this thing. So yeah, again, guys, I'm not going to be in every single one of these trades, but I am going to highlight all of them. One of the best things about LTMP is that I'll find like 85 to 90% of the moves out there. But the group is always hunting. It's like a hive mind of people that are just like looking for one specific thing happening in the market and nailing them. So again, the outline yesterday on the private stream, we were talking about Marvel over 68.50 here. I'd be very curious to see what those trades are up right now. Romeo, I think Romeo's still in here. At 11:24 a.m., those were up 217%. Those have got to be up 400 or 500% now, depending on, I mean, what's happening in that move. Those could actually be up 1,000% now. So that might be the 7th 10x trade that I've outlined for the group in the last week. PDD moving. Yeah, PDD is looking like it wants to go to the highs here. So again, great move on this one. This was what, 260% for us today? Really, really, really good action, guys. Again, there is nothing like LTMP out there in the market. You're never going to see anything else like it ever again. Don't just take my word for it. I mean, I show you guys the results of it every single day here. So let's keep paying attention here to the news feed. And again, for those of you guys just filtering in here, make sure you guys are slapping that like button on the way in. We have a 200 like goal on the stream today, guys. Hopefully we're able to hit that. That would be absolutely awesome. Fed says downside risks to employment have risen. Again, remember what I was talking about a little earlier in the stream, that inflation is going to run at an elevated rate. But if that's going to happen and the Fed's not able to do much about it, you have to be in a situation where growth is going to outpace those effects of inflation. Now, it is a self-fulfilling prophecy that more growth can bring more inflation. But in the short term, the market needs to see growth continue, because if it doesn't, you run into a situation with elevated levels of inflation, unemployment rising, and growth slowing, which is the definition of stagflation, which has been a risk this year, albeit not a high risk, but it has been a risk this year. So that is what the Fed is looking at. They are okay with letting inflation run a little bit above trend, but they're not going to sacrifice growth, which is what they are starting to do with these 25 basis point cuts here. So The best thing is he finds trades for all different account sizes, so it's not just for big money accounts. No, I mean, I showed you guys the trade today where you could have turned $95 into, I mean, now it's a lot more, but it was $95 into what, like 1,400, 1,500? Now is moving. Nice, yeah, if you're still in that, that's good. Marvel, absolutely insane trade there. Lunar, hold on. Again, I'm not touching anything today, guys. Peloton move. I want to see what Lunar's doing. Again, this is not the time to be taking action in the market, and this is one of the things I've been talking about a lot, is that, like, well, if we are going to see the market react positively to FOMC over the next couple of weeks here, do you guys understand what is about to happen? If you guys thought the last 16 in the last 2 months 10x trades were crazy, you have no idea what's about to happen next. No idea. It's going to be absolutely ridiculous. There's been, what, 6 or 7 of them in the last week? Romeo, I'm very interested to see if these, what do you call it? Marvels are up over 1,000%. They might. They're short-dated. Low is, yeah. Is that a breakout? I think it is. Yeah, that's moving. So, again, trading views glitching a little bit here, guys, but, I mean, I'm not touching anything here. I'm waiting. I'm good on everything that we've got. So, again, nothing changes, guys. Nothing changes from what I said in the pre-market plan on the streams this morning, that I'm not touching anything today, even if we were to see this very, very positive market reaction, which, as of right now, we are starting to see. Or in group. Well, Meme Hub, so there's 2 trades this year. I mean, in terms of percentages, I think it's like 5,000%. The biggest one that I've seen this year in LTMP was an 8,000% return on Datadog. I'll show you guys that one, actually. That's a really good one. So Datadog here, this was the breakout level on Datadog that we outlined for the group. It was like 123.50. You were able to ride this thing up. I hit a lot of profit targets in here too. And then you got the S&P inclusion news, and that's what sent this thing up 8,000%. The next biggest trade that we had was actually 6,300%, which I've talked about a lot. And that was on Kohl's, on this breakout right here. So this was the level that you were looking for, chopped around, chopped around, chopped around, and then started launching during Wall Street Bets Week there. What risk to reward are you usually aiming for? I'm not aiming for a risk to reward. Well, okay, that's not entirely true. I want the chart. Okay, that's not entirely true. I want the risk to reward of the first profit target to be usually, if it shares, 1 to 3 at least. But with options, it's like, well, like, once you go through the course videos, Patrick, it's gonna make so much more sense to you. You do in the money options? Well, that's not how I teach it, but I mean, I've still seen your results there, and they're really good, San. What's the best platform to reach you on? Twitter or Instagram. The other thing you guys got to realize too, and something I say a lot, is I will never, ever, ever use Discord DMs, even if you tell me in Market Chat or Market Talk, whatever it's called, that you message me on Discord. I'm not looking at it. There's too many scam accounts on Discord that try and message you guys as soon as you join. It's like, it's not like, that's not, I just message me on the Twitter account that I sent you guys in there, or on Instagram. That's where I'll be able to see it the most. Or just ask me a question in Market Talk, you know? But yeah, again, prices are going up at the end of the month for LTMP. Make sure that you guys lock in the lower rate. Remember, prices are eventually going to be $199 a month for this group. Right now, they're very low. So again, you get to lock in the lower rate. You get 50% off your first month with code September. I'll actually throw that link in the live chat here for you. Yeah, San made $2,500 in 2 weeks. Great work. I mean, shout out to Asian Pelican too on that AEO trade, making 20 grand. That's great. I mean, I'm going to post the, just in the last week here, guys, I'm up like, I don't know, almost 12 grand. It's like 11,000 something. I'm good at day trading over a long period, but swing trading is way better, what I figured out lately. Yeah, it is. It is. It's something that I say, and again, it's like in one of those truths about the market that you will eventually learn. Gold, nice comeback today, did it? Yeah, so I didn't even talk about this. Guys, there are so many epic trades that I've given out, I just forget about them. This one, so I bought, it wasn't a big position. I outlined this one on the weekly for you guys here. I'll show you on this chart. This is just the perfect weekly setup. You get the breakout here in the 317s on gold. I bought like, not a lot, $22,000 worth of gold right here. But a lot of you guys traded this weekly breakout too. I believe that was what, 750%, 800% on that one. How much are you usually risking in terms of percent? 1 to 3. But that's all outlined for you guys in the course videos. And the one thing that I like to say a lot too is like the people that harp on trading psychology and like risk management in the market are amateurs. They are complete amateurs. And I know that statement sounds crazy, but hopefully you guys listen to what I have to say next. The only thing that matters in the market is your edge and strategy. Why is that? Well, your strategy is going to tell you what you should be risking on each individual trade. So check mark, done. No need to focus on risk management anymore because the strategy is just going to tell you, okay, don't be an idiot and don't risk too much on a trade. Okay, done. And this is going to come to a more like meta point here as we get closer to it. But trading psychology is one of the things, and trading journals, I think, are some of the biggest scams in the market because when you have a strategy like we have in LTMP, you have a really good understanding of what to expect over time. And this is where I also say, like, the people out there that are saying, ooh, follow my trades, just take alerts and all that stuff are doing everybody in the trading space a big disservice. Not only is it illegal, but it doesn't help anybody. The reason why everybody's able to have so much success when they hop into LTMP is that the whole entire thing is based on this one principle. In order to have long-term success in the market, you have to understand the exact reasons why you're entering the trade, where you're going to enter it to, how you're going to manage the trade when you're in it, and exactly when and why you're going to exit. When you understand those things, it makes it a lot easier to manage the trades, and also combining it with understanding what the strategy itself is able to generate you over time. That's why I showcase these crazy gains for you guys all the time. See, market coming back down. Again, it's a dud. That's why I showcase this to you guys all the time, because when you can understand what you can generate over time, the thought of doing anything else in the market will make you feel sick. You'll be like, why would I chase this stock? Why would I trade FOMC? Why would I gamble on these like SPX ODTEs? Because it doesn't make sense to when you could just sit around and wait for the big multi-100 and multi-1,000% trades to fire off. It's also the way I look at it too. I won't say it's impossible because nothing is impossible in the market, but it is way less likely to get yourself into really big trouble by swing trading in the market than day trading. Because again, you're predefining your risk, especially if you're sizing for zero, which we talk about a lot, which is your position size is your risk. And the gains are a lot bigger and more consistent, especially when you look at this stuff. So again, you guys have had everything you've ever wanted out of the market has been right in front of you the entire time. You just have to listen. I feel like there's a lot of new people that aren't on the streams all the time in the chat today. Welcome. It's great to have you guys in here. Hopefully you're getting a little bit of a taste of kind of what we do around here, showcasing some of these results. I'm going to look back in community gains here. Yeah, I haven't seen an update on the Marvels, but that is, I mean, where is it now? That thing was ridiculous. It's probably coming back down a little. Yeah, but I mean, if you held that into this, I mean, those were probably up 1,000%. So market coming back down. Let's take a little bit of a look at, but does that make sense to everybody why I think like the whole focus on like trading psychology and risk management is nonsense? Because it doesn't actually tackle what's important. Like I literally saw a tweet one time that was like, in order to have success as a trader, you got to imagine yourself being successful as a trader. And I was like, excuse my language, that's like the biggest pile of, okay, I won't use bad language, biggest pile of garbage that I've ever seen. Your struggles in the market are not coming from the fact that you're not manifesting or staring at yourself in the market saying affirmations. You're struggling in the market because you don't actually have an edge. It's simple. Like, it's very simple. No amount of like writing stuff down or anything is going to help you if you don't have a strategy that's built to generate you positive returns over time. It's just simple as that. Sold them at 350. Nah, that's all right. That's still good. 350%. So what do we have this week for trades? For the big ones, for the big winners. We have over 1,000% on Tesla. We have 350% Marvel. We have 1,500% Baidu. We have 260%, what else? Pinduoduo. We had some other really good ones there too. A couple other base hit type of trades in there. So again, you guys have the link. 50% off your first month. Code is September. Don't miss out. I'm telling you, you're not going to want to miss this. I keep saying it. Best broker for your trading. Me jumping out a window for answering broker questions every 10 seconds. Doesn't matter, guys. It doesn't matter. Use anything. Use anything that's US regulated or Interactive Brokers or Tasty Trade. It doesn't matter. I said it before, is people love to focus on the things that don't matter. It doesn't matter. The broker's not going to make you successful, just like focusing on saying things to yourself in the mirror is not going to make you successful. Or writing stuff down in a journal is not going to make you successful. I hate to sound harsh sometimes, guys, but God, this is so mind-numbingly simple in the market. It's just focus on the stuff that works and learning the system. If you guys saw, those of you guys on the outside saw how easy it is for me to call these, you'd be like, oh, okay. I get why he's acting like this. You also have German students here? I know. That's why it's okay, here's another, like I've said like 10 times today, any broker that gives you access to trade US equities that isn't some offshore nonsense, it doesn't matter. Tasty Trade, Interactive Brokers, any of them, doesn't matter. E-Trade, it's I like E-Trade. E-Trade's pretty good. It's just, do you guys get it though? It's like, let's focus on the things that are actually going to give you guys the ability to have success, right? Yeah, Geister's German. There you go. A lot of people will be like, oh, I'm from the UK. And then it's just like, no, you're fine. You can easily trade this. And they go, okay, they join, and then they crush it. Like, it's just going to keep getting better and better. So market's kind of flashing around here. Again, guys, so when I want to kind of go through this as well. I know it's like very fun to look at all of the big multi-100 and multi-1,000% gains. But when I say that that's the easy part, this is what I mean. The entire week, I've been talking about sizing very small going into the market this week, and also not trading today and not gambling on FOMC and not trying to do things too quickly. The reason for that is that these types of moves right here where it rips up, comes down, goes all over the place are very likely to happen. And like we were seeing earlier today, and like I said earlier, I was like, I don't care if we see a textbook A+ setup break our level to the upside. I'm not touching it. Because this is a likely scenario that we're seeing play out right now. Now, things could come back up, but it doesn't matter because if we are actually going to see the market react positively to this report over the next few weeks, the amount of setups that we're going to have are absolutely insane. And given the fact that we were already nailing 1,000% trades on Tesla, 1,000% trades on Baidu, 250% trades on Pinduoduo, 350% trades on Marvel, there's no need to take that additional risk going into FOMC. Remember, most of the time, the smartest decision is to do nothing, not to take some sort of action. So the real value in the group is not necessarily the big multi-1,000% trades. Obviously, you're all going to hit them when they fire. It's understanding when to sit back in the market and just let all the other idiots take action, and we just sit back staring at all of our games. Quad witching this Friday? Pretty irrelevant, honestly, to me. Like, that, all that stuff to me, people love to make a big deal out of it. Like, that stuff, seasonality, I don't really pay that much attention to. You can see a little bit elevated levels of volatility, but price is still going to move based on what's happening in the newsfeed and just overall technicals anyway. So, but the reason why I talk about those things, like understanding when the market's flashing at you a yellow light, is because, like, if we are, like, given the fact that we are going to be hitting these massive trades, we want to do our best to keep the gains. To say, okay, these are the gains that we have made. How can we protect them and then deploy them at like better setups in the future that also make sense? Because if you can get that right, you have way more capital to deploy at the next round of 10,000 percenters that I'm going to give out anyway. And you're not going to be in this situation where you make a bunch of money and then you lose a bunch of money, make a bunch of money, lose a bunch of money. So that, to me, is where the value in the group really comes. And it's that comes from, I think, just the experience that I've been able to build up in the market over all of these years of doing this. I understand that I look young. I'm 26. I've been doing this since I was like 14 years old, guys. So, and that's why, like, we see these results the way that they are, and it is very, very, very different from what everybody else sees on the internet here. So it's just going to keep continuing. This is going to be fun too, coming up to Powell. I'm going to start pulling up the stream. This is going to be a very, very interesting Q&A. So we're going to listen to that in about 10 minutes here. So actually, I got to make sure we don't have the music on, I think. Okay, hold on. You guys got to let me know. Can you hear this when I click it here? I don't think you can. You shouldn't be able to hear the music right now. It doesn't matter. What car do I drive? See, I love this. This is so funny. I don't have a car. I don't need one. I live in Boston. I don't need a car. The other thing, too, is, like, you guys are never going to see me do this. You guys do realize, like, I've had weekends where I'm just like, should I just go buy a Ferrari and then just like post about it on social media, like to just like get everybody else's opinion, like just appease everybody else? Yeah, why? You aren't monetized anyway? I know. But the thing is, guys, is that when you're in the position that I'm in and you're able to generate these results for everybody else, I'm gonna use some harsh language here. I don't give a flying fuck what everybody else thinks. I actually, when I go out in public and I'm not doing this, I don't want anybody looking at me. Zero. You're in Worcester? Nice. Nobody. Yeah, car would be nice. You know what I actually want? An F40. That's what I want. You're never going to see me be one of these kids that are just like, oh, look, here's my watch. I want you guys following me for the information and value that I provide, not because I just bought a car. This whole lifestyle marketing thing, just following people that are just like standard deviations below like intelligence levels, that I just don't care. Like, and the other thing is too, is like, that's not the reason why I make money, or it's not what drives me to make money. I think that a lot of people, we don't really get like philosophical on here very much, but like we could. I think if your main motivations for making money or having success are a thing, it's not going to go well for you over the long run, because I think every single person in the live chat right now, has saved up for something and bought it, and then in the next 2 weeks they're like, oh, this didn't really give me the feeling that I thought it was going to. And if all of the work that you are going to do is going to have some sort of fleeting reward, well, then the motivation to continue working the way that you are is just going to continue to go down and down and down and down and down over time. I just don't care. It's almost everything out there like that, guys, is just to impress other people. I don't care. I have a really nice apartment, but it's a place for me to live in. Let's see. From Boston, just moved to Vermont? Nice. I love Boston. That's what real rich traders do. Yeah, I don't care, guys. Like, it attracts the wrong type of attention. I don't care. You know what drives me? You know what actually drives me? There's a lot of different things. But some of the ones that I'll tell you are one of the best things that like I see is during the holiday season. I have gotten, guys, you have no idea how many messages that I have received before that is pictures of like PlayStations or like other gifts or food that people are donating. Yeah, like Brittany, I help fund my local bank, feeding the whole neighborhood. Exactly. Or then you just see like these people's kids that are just grinning ear to ear. And it's like, I'm more focused on the impact that I have for most of you guys than I am me buying a watch, dude, or a car. I don't care. That's what keeps me going most of the time, is seeing those types of messages. And also, I feel like a lot of you guys know this about me. Like, I've told you what I would do, or like what I would like to do again. If I just like really was just like, I'm retired now, I'm not doing this anymore, I would just go back and work at the special needs day camp. That's what I would do. That was my favorite job of all time. That was my favorite job ever. I hated caddying. Caddying sucked because I was hanging out. This is like, I was caddying, guys. I was hanging out, like, it was a nice golf club, but like I was hanging out with a bunch of people that thought they were way richer than they were. And the way that they acted, I was just like, you guys do realize that the money is so meaningless. Yeah, and it enables you to do cool stuff sometimes for other people, but the way that most people treat it is they think it's like their whole personality trait, and it's just not. It doesn't matter. Nobody cares. You think I care? You think that I'm gonna go out and talk to somebody if they're just like, so they're not not at my level or something, and treat them as less of a human being because they're not? No, I don't care. Let's see. Woo! Mac Wright, welcome to the group. There you go. I'm going to send you the start here message right here. I was slacking a little. I was going on a little bit of a rant here. More impressed all the time. Yeah, I did that for, I think, a year, 2 years. And smoking meth. No, those were the caddies. It wasn't meth. They were smoking crack. Okay? Get it right. Yeah, welcome to the group, guys. Once you guys hop in and start going through everything, like, I do get harsh with you guys sometimes, but it comes from a place of, like, if you guys just listen a little, you're going to have all the success in the world, and I can't wait to see all of your results. So, we've got about 5 minutes here until Powell's going to come on. Again, if you guys are enjoying the stream, slap a like on it. Oh, but also, this is the other thing, too, guys. Like, with the money thing, it's, like, it's different. Like, obviously, you guys probably saw, I was going to the club a little bit, like, a decent amount. While ago. But you do it enough and you're like, oh. Like you go through learning experience. You're like, none of this matters. None of it. Nobody cares. You know why I was doing it? It wasn't for me. I didn't care. You think I cared? No. It was to go because a lot of other people, okay, this is okay, I gotta make sure this comes across the right way. A lot of other people like cared about having that cool experience. Not like other people looking at me. I'd literally lay down. I would be laying down. Let's see here. Sanj, what's up, man? How you doing? Welcome back. Again, guys, keep smacking that like button on the way in. We might be able to hit that 200 like goal today. We're going to get Powell on here in a few minutes. I'll be breaking some stuff down to you guys, but welcome to everybody that's hopping into the group. This is going to be awesome. It's going to be really, really, really great seeing all of you guys. It's really, and then we have the mastermind coming up. Oh my God. That's different. That's like college level education and finance that I wish people had. So that's coming up soon too. Oh, it's gonna be great, man. I'm excited. We're making money, having a good time. We got a lot of people filtering in and out of the stream today. Welcome, guys. Welcome, welcome, welcome. Oh wait, hold on. Did the 10-year get slaughtered here? Hold on, I want to see that. Ooh, yep. 10-year flirting with 4. Where's Bitcoin? Flat. Not flat, but like not really moving all that much. This is a dud. Like I said, I was like, this is kind of the ideal FOMC meeting. You want them to be duds. You don't want to see crazy movement off FOMC. There is still time for this to happen. For it to get crazy. But I think we're good. I'll probably, yeah, that video where I kind of outlined me being up, what I'm up over the last week here. I'll probably post that on like YouTube Shorts a little later. It's already out on TikTok. I might save that for tomorrow for Instagram. Instagram's a little weird. The other thing, guys, the other thing that you guys may not realize too is like, guys, I swear to God, I've done this so many times. If I post a video of me day trading on TikTok or Instagram, it's gonna get 1, 2, 3 million views. It just attracts the wrong audience. I don't want that. I've done it. I told you guys before. I was like, here we go again. I'd rather show you guys like the actual, because it's just like, it's an aggregation of views, but it's like, whatever. Like if I did another one like tomorrow, here's 1 million views. It's not the right audience though. I like you guys in here that are actually willing to learn, that actually realize like there are right and wrong ways to operate in the market. Like my abilities like intraday in the market, you guys see them with like the volatility zones that I don't really outline them that much anymore, but like they're pretty nasty. That the bottom and top ticking. It's just I don't in the way that I want to live, I don't want to be sitting here staring at stuff all the time. I just don't. I'd love to look at the bigger time frames, get my entries, make multi-hundred and multi-thousands of %, and hand out 16 10x trades to you guys in 2 months. You know, that's what I want to do. Nice and relaxed, easy. Yeah, welcome, Mac Wright. Welcome to the group. Welcome to all of you guys hopping in there. Again, prices are going up at the end of the month here. You're able to lock in the low. Again, the price you join at never goes up on you. So you're able to hop in, lock in the low rate, get 50% off your first month with code September. I'll throw the link in here one last time in the live chat before we start with Powell here. There you guys go. Don't miss it. Pay attention or pay a premium. Everything you've ever wanted out of the market has been right in front of you the entire time. So we're going to get Powell in a second here. I'm going to get this ready. I'll ask you guys if you can hear Powell in a second too. DocuSign. What do you call it? What's one vice I have? Drinking. Nicotine. I've slowed down on the drinking though. Just on the weekends. I'm not drinking during the week. Not a moron. Just going out with my friends, having a good time. You know? But I'm old now. It's like not as fun anymore. Plus I have a girlfriend now, so it's like I don't need like what am I doing at a bar, dude? I don't care. You joined at 50 and now you're paying 71. No, it didn't go up. It didn't go up on you. If you rejoined, then yes, it will go up on you. You probably joined. That's weird. Sanj, send me a screenshot of that because I know it doesn't increase because it's a different tier that's out there right now. So I don't change anything on the existing tier. What probably happened is you used the 50% off code or the 30% off your first month code or something, and then it went up. Or if you moved, sometimes there's like currency things. All right, hold on. Powell's on. Sorry.
Lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Great. Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Miron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Well, great. And then just as a quick follow-up, I'm sorry, can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timmeros of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that. But we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted, and how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now. And so that warrants a change in policy.
Colby Smith with the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our policy.
So just looking at the SEP, once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment if you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address. How do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
I can follow up. Every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right.
He's
It
gonna
does
say
say
no,
we're going to get to 2% inflation in 2028, at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create, over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years, but the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that, though, right? We have to. Our job is literally to make sure that that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal? So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
Are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment, and the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. Let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just, everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now. And people they're making their arguments, and we're having really a great discussion around these challenging issues. So
Do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount, and I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded, and it's just really hard. You can't survey for that. You've got to have a model that predicts that, and it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month, and you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
But for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. It shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
We have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. A black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I didn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter, and I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that. You see minority unemployment going up, you see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So, that's how we see it.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I, of course, am not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve Federal Reserve System and at the board. Are they the right size? We're actually going through a 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
But not an independent review?
We're certainly open to to always trying to do better.
Neil.
Mr. Chairman, Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess, but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college. And yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI more than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down. And so it's probably a number of things. But yeah, it's probably a factor. Hard to say how big it is.
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
Well, if you can take goods, just sort of the broad goods category, and last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was, goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation went very high, but we had essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, I mean, analysts have different views, but we think it's contributing, 0.3 or 0.4, something like that, to the current core PCE inflation reading, which is 2.9%. So it's contributing. What seems to be happening is that, the tariffs are mostly not being paid by exporters, mostly being paid by really the companies that sit between the exporter and the consumer. So if you buy something and you sell it through retail or you use it to make a product, you're probably taking those a lot.
Remember, that was what we were talking about with PPI jumping. So that's the corporations eating the cost of tariffs and not passing all of those down to the consumers because they know it's the demand argument that we've been going over. Okay, so that's what they're talking about right here. Sorry.
The past has been pretty small. It's been slower and smaller than we thought. But the evidence is it's very clear that there's some pass through.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in May.
I have nothing new on that for you today.
Hi, Katerina Saraiva with Bloomberg News. I just wanted to follow up on one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of, the forecasts that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
So there's 12 vote, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really, the only way for any voter to really move things around is to be incredibly persuasive. And the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters. And that's how it's going to work. And I think that is the way the institution, that's in the DNA of the institution. That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is, and what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
Claire Jones, Financial Times. Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you heard about, on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
So I think there's quite a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut. And some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual, historically unusual nature of the challenges that we face. But let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times. But from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment, which is those are our two equal goals. And you will see that there are a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.
Thank you. Archie Hall from The Economist. You mentioned earlier that job creation was running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
So there are many different ways to calculate it, and none of them is perfect. But it's clearly come way down. You could say it's somewhere between 0 and 50,000, and you'd be right or wrong. I mean, there's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly. And that's because a very lower amount of people are joining the labor force. The labor force really not growing much at this point. And that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up just one tick outside of the range where it's been for a year. 4.3% is still a low level, but I think this speedy decline in both supply and demand has certainly gotten everyone's attention.
Follow up, if I may. You mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PCE numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in, and it's a good bit from consumption. It looks like consumption was stronger than expected, what we got earlier this week, I guess. And also we're getting, a fairly narrow sector is producing a lot of economic activity, which is the AI build out and business investment. So we watch all of it, and I would say we did move up. The median for growth for this year actually moved up in the SEP between the June and September SEPs. So, and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
Nicole. Hi, Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation for a segment of the population?
Housing is an interest-sensitive activity, so it's at the very center of monetary policy. When the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that, and they were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and so rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates, and that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help, builders will help supply. And so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot big changes in rates to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy. That's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people, and all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out, and so that's where it is.
And just a quick follow-up. During the last SEP, or the press conference following the last SEP, you seemed to indicate that policymakers lacked conviction about their projections, and I'm wondering if you still feel that way.
Forecasting is very difficult even in placid times, and as I've mentioned before, forecasters are a humble lot with much to be humble about. So I think right now is a particularly challenging time, even more uncertain than usual. And so I don't know any forecaster anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. If you're cutting rates, why continue to reduce the size of your balance sheet, then pause the unwinding?
Well, I think we're cutting the size of our balance sheet quite marginally now. As you know, with the balance sheet, we're still in an abundant reserves condition, and we've said that we would stop somewhat above an ample reserves level. That's where we are, and we're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant macroeconomic effects. These are pretty small numbers moving around inside a giant economy. The level of runoff is not very large, so I wouldn't attribute macroeconomic consequences to that at this point.
And at his recent confirmation hearing, Stephen Myron brought up that the Fed actually has 3 mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. So what does Congress mean by moderate long-term interest rates? How should we understand that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So we always think of it as the dual mandate, maximum employment and price stability, for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that we somehow incorporate that in as something in a different way.
Thanks, Chair Powell. Matt Egan from CNN. We recently learned that average FICO credit scores are down this year by 2 points, the most since 2009 during the Great Recession, and delinquencies are high for car loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumer finances, and do you expect today's cut will help?
So, we're aware of that. I think default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall they're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have a visible effect on that, but over time, a strong economy with a strong labor market is what we're aiming for, and stable prices. So that should help.
Just to follow
This rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially fueling a bubble?
You know, we're tightly focused on our goals, right? And our goals are maximum employment and price stability. And so we take the actions that we take with an eye on those goals. Separately, and that's why we did what we did today. Separately, we monitor financial stability very, very carefully. And, you know, I would say it's a mixed picture, but households are in good shape, banks are in good shape. Overall, households are still in good shape in the aggregate. And I know that people at the lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. We don't have a view that there's a right or wrong level of asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities. And I would say those are not elevated right now.
Jean, we'll go to you for the last question.
Hi, Chair Powell. Jean Young with M&I Market News. I wanted to ask about inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, I'm wondering, do you see evidence that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
So as you said, shorter-term inflation expectations have tended to respond to near-term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little while to get back down. Fortunately, throughout this period, longer-term inflation expectations both break even in the markets, and almost all of the longer-term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of, you know, running at levels that are consistent with 2% inflation over time. So we don't take that for granted. We actually assume that our actions have a real effect on that, and that, you know, we need to, you know, continually show and also discuss our commitment to 2% inflation. And so you'll hear us doing that. But you know, as I mentioned, it's a difficult situation because we have risks that are both affecting the labor market and inflation. Those are our two goals, and so we have to balance those two. When they're both at risk, we have to balance them, and that's really what we're trying to do. Your latter part of your question was about independence. I don't see market participants. I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
All right, ladies and gentlemen. Oh my God. Very, very interesting meeting there. I mean, we've got a little bit of a hawkish cut, but again, it doesn't really change anything in the grand scheme of things here. We got pretty much everything that we were expecting to happen, but oh my God, Baidu. Ladies and gentlemen, this again is the 16th 10x trade that I have given out to LTMP in the last 2 months here, with 6 of them coming in the last week here, ladies and gentlemen. I keep saying it. I'm going to say it again. I have been vindicated every single time that I've said it. Again, I'm just going to keep handing out the most disgusting trades in the market. This trade, guys, would have made your entire year. Entire year there. Ryan right now is saying Baidu up 1,700% for him. Absolutely epic work. PDD is still cruising near the highs here, guys. This one's looking phenomenal. Again, these are all free. That next target on that one there is about 139. Guys, I'm just going to keep handing these out. This market is going to look so incredibly hot over the next few weeks here, I think. Again, the question at this point, obviously, is not whether LTMP and the strategies and the things that we do in the market work. The question is, how many more of these life-changing trades are you actually going to actively decide to miss? So I'm going to throw that link one last time here for you guys in the live chat. It's also pinned to the top of the live chat there. Again, use code September, get 50% off your first month. Remember, prices are going up at the end of the month, but if you join before that happens, you'll get locked in at the lower rate. The price will never go up on you. So, ladies and gentlemen, I will see you guys back in the live publicly here at 10:30 a.m. Eastern tomorrow. Friday, we'll be doing public live day starting at 9:15, so make sure all of you guys have, notifications turned on for the channel. Tesla retest, ban that word. No, well, not retest. I mean, this is another setup here. I'm not touching this. We already nailed 1,000% on Tesla. Our dirty work on this one is done. It's not really much. I would be waiting for this one. It's a little bit too extended. I'm not really going to be going for this in the short term here. So, again, guys, everything you've ever wanted out of the market has been right in front of you the entire time. Baidu up 1,800% now. Guys, are you not convinced yet? I'm just going to keep doing this. It's not hard. Once you guys see how easy this is, you're going to be like, why wasn't I doing this all along? That's actually the most common piece of feedback that I receive. And also, once you see it, you can't unsee it. So, guys, shout out to all of you guys that hopped into the group today. Thank you to all of you guys that hung out in the stream. That was fun. Very interesting listening to Powell here. We're about to get the ding on Baidu. It's like 2 cents away or something here. 136.42. So, another profit target there. Ryan, I don't know how much you've got left here. Don't you just have like a trailing stop, just letting this thing go? That's going to be nuts. So, guys, there it is. Baidu hitting that target there. So, again, anybody left in this Baidu trade, you can trim a little bit more there. Next target on this one is going to be 151. If it hits that, that's going to be a 1 to 20, almost 1 to 23 risk to reward trade on shares. I will keep saying it. There is not a single person out on the internet right now that is generating the types of results that I am for my students on a day-to-day basis. It's just not happening. When I stop doing this, you will never see anything like it ever again. Ever. Ever. So yeah, guys, I'm just going to keep doing this for everybody. We're going to keep making crazy gains in the market. I know it sounds crazy, but after 16 in a row, what more could you ever want? So guys, welcome to the group, everybody. We're going to get you guys all up to speed. The rest of this week is going to be interesting to see kind of the digestion of this move. I'm not sure how active I'll be in terms of new trades. It's been a really, really good week. I'll post some of those YouTube shorts. I think I'll post that YouTube short in a little bit. I mean, I don't know. It's good. It's decent gains. I obviously sized down going into last week and this week, but the gains are still good. So I will see you guys later. Have a great rest of your day. Congratulations to everybody. Just enjoy that cash that you guys have generated. Take it out. Do something real with it if you want to. If you want to leave it in your trading account, preserve that capital for the next round of epic trades that are going to come probably in the next week here. But yeah, guys, I will see you guys later. Have a great rest of your day. Welcome to LTMP.